Afternoon all, how are we all doing? I'm late. Forgot, the clock's changed. After telling everybody this morning, don't be late. We do at 1:20 this afternoon because the clocks have changed. I was like, oh, I completely forgot. Afternoon, Edward, Monkey, Peter, Ian, Christian, XR8.news. How you doing? Julio, Amy, Evans, Virginia, Fletch, Gregors again? No, not Gregors again. I'm mad. Afternoon, Mark. Alistair. Right. So, DAX this morning. Nice, quick, easy break. Where's my pen gone? So we had a nice move up this morning. Oh, the hell. Platform. So the opening range this morning, quite easy break. It was very, very, very slow to get there. That was my TP. I got out a bit early because we were really struggling with upside today. And we got that nice big reversal candle. So basically just took $550 or something out of it this morning. And it hasn't gone anywhere. So I hate longing things that have got a huge gap. So I think this afternoon, there's a good chance we might get a drop. All the US indices have also got gaps to the downside. Gaps like to get filled. So US indices haven't made any progress this morning either, very much. Everything's kind of hovering around. So I think we might get some drop today. But we will see where we go at the open. Yeah, $570 this morning. So there's no news today. We had the Spanish CPI and the German GDP at some point today. We're going to get that. German CPI at some point today. We're going to get that. We've had the German GDP, Spanish CPI. So nothing particularly exciting news-wise today. Main news is tomorrow. Kicking off with the Bank of Japan press conference, and then we go into the unemployment rate for New Zealand later on in that day. We got the CAD GDP in the middle as well. It's all about FOMC Wednesday evening, and then we've got the Bank of England rate on Thursday before non-farm payroll, or rather the unemployment rate on Friday. So lots of news coming up this week. Not a lot of other news this morning. That I could see anyway. World Bank, large disruption scenario could equal the 1973 Arab oil embargo and could drive Q4 oil price to $140 to $157. That would be nice. I'm long on oil. Bring it on. I was targeting $100, but if you want to give me $150, fine, I'll take it. Medium disruption scenario would equal the 2003 Iraq War, could drive the Q4 oil price to 109 to 121. I'll take that either. One or the other. I don't care. Either or. I'm targeting $100. So you want to give me 120? Fine. But apart from that, nothing else this morning. So I banked a little bit of New Zealand US. I just put this in the Telegram channel a second ago. So I've taken this one off the lowest order that was on, banked that, and I've done drawdown control on those two. So I've taken 50% off of that one and 30% off of that one, and banked just under 0.5% or 0.38%. So I'm just reducing my drawdown on this. It's just going sideways. So there's so much stuff going sideways. This is the only one I can really do any banking on at the moment. That's why I've done it. But we're like 1, 2, 3, 4, 5, 6, 7, 8 days now. Just not going anywhere at all. So I'm just reducing a bit of money. Right. Market's just about to open in 1 minute. Obviously, today we've got upside and downside available, obviously, on both of these, as you always do. It goes up or down. But today, specifically, there's a gap fill to the downside. So we'll see if we get that filled today. If we do break to the upside, it's yesterday's high, across the board. So resistance to the upside is yesterday's high, which is there, up there, and up here. Sorry, all the way up there. That's above ADR today there on the Dow. But yeah, so if we go upside, we're looking at yesterday's high as resistance, but downside, we're looking for that gap fill. So we'll see where we go. Just open up the platform over here as well, because I'm manually trading on an account at the moment. So no pre-market breaks at all. Oh no, I'm long on the Dow. Jesus, didn't even get a chance to press the button on that. Okay, fine, missed it. Right, long on the Dow. This is why we use EAs. I didn't even have time to react to that. It's gone. So long on the Dow. Pre-market range too small on the NASDAQ and the S&P. So I'll be taking the 5-minute range on that. Lot of volume. Look at this thing. Look at it. Chihuahua on cocaine driving a Lamborghini. That's annoying. Never mind. So don't really want to go long on the Dow because there's a massive great gap to fill to the downside, but we'll see where we go. Afternoon, David. Afternoon, Brian. That's a really weird break. Look at that. NASDAQ broken down, S&P broken up. Something's not adding up there, is it? Okay. Going to close one on the Dow. It's just missed TP, so I'm just closing one of those out. That would have hit TP. No, it hasn't. It's just missed it. Look. Literally just missed it. Okay, break even on the second position. Let's see where we go. Oof, hectic today, isn't it? Okay. Oh, loaded the wrong set file on that. I was going to say that lot size is a bit big. That's way too big. Dow. Sorry, one sec. 11.5. Let me just resave that set file. That's way too big. Ooh, that was lucky, wasn't it? That would have been a big hedge today. So that's the Dow. I'll take that though. I got 75. Yeah, I got 75 lots on the Dow. I was just looking at it. I was like, $4,000. How did I just bank $4,000? Basically, because today obviously the clock's changed. 75 lots is what I use on the S&P. So basically, I resaved the set files with the new timings in. For obviously everything's got to move an hour forward for the next week. And basically, I've saved the S&P as the Dow and the Dow as the S&P. So I've made the Dow trade with the S&P lot size, which is a lot bigger than I was wanting to trade. That was lucky because I could have actually really hurt my month there. But I'll take that, $5,000, and thank you for the mess. You need a set file from your WhatsApp assistant. My what? What's a WhatsApp assistant? I haven't got a WhatsApp assistant. It's going to be too big to take today. I'm not taking the NASDAQ. That's way too big. S&P, I think, is probably going to be too big. It's far too much volatility today. 82. No, I'm going to take the S&P, but NASDAQ is going to be far too big to take. So S&P going to take, already have gone long on the S&P. That was a big move today. Okay, so long S&P with correct lot sizing. The scammer. What? I haven't got a WhatsApp group. I think you might be mistaken with someone else. I haven't got WhatsApp. J3GM0194. I don't use WhatsApp. I don't know what that is. Well, I do know what WhatsApp is, obviously. I have got WhatsApp, but only for me, not for trading. Oh, the Telegram. There's no scammer in the Telegram, is there? Oh, apart from the guy that contacts everybody. Well, yeah, it's all organised crime, basically. It's the Russians, all the criminals. They just try and rip everybody off in Telegram. There's groups doing it all over the place, but yeah. You can do there. Scammers are scammers. God, these are big moves, aren't they? I don't know what to do with this today. Looks like it does want to go long, doesn't it? But I really hate longing things when there's a gap to the downside to get filled. So, and that's a big old opening range today, isn't it? As well. Does look like it wants to go long there. There we go, broken to the upside. So S&P today is the only other thing I'm trading. The Dow's already done. So S&P upside, we're looking at yesterday's high as the initial resistance, which is here. But we've got multiple levels for a gap there. So tricky one today, isn't it? Could go anywhere, really. Just going to see if I can get a 2-hour break to the upside on the S&P. I might close that out manually, depending on how quickly this starts to move. NASDAQ's going flying. That NASDAQ move. Market's in ludicrous mode. Run with it. See where we go. If it does break to the downside, so if this upside break fails, we've got yesterday's high, which we're trading into now. So if we get to that level and it fails and the limit orders trigger and break us back down again, it's a very quick, easy short down into the gap fill. And then we'll probably get a bounce out that gap fill. But it doesn't look like it wants to stop at the moment. Absolutely screaming to the upside today. Very nice. Anyway, right. So we'll see where we go there. Cool, that was lucky. That was on the Dow. That's not the first time I've done that. I have done that before. The trouble with saving set files is when you, especially in MT4, like where we are obviously at the moment, you basically go, okay, I'm going to make some changes to this set file. And you go and do something else, which is exactly what I did this morning. I went to change the set file and I was like, an email came in and I was dealing with the email. And then I came back to here and I was like, okay. I mean, change the times. Oh, what was this? And I can't remember which one I opened. So I saved it and I assumed I'd opened the Dow, but I hadn't. It was the S&P. So the lot sizing, which should have been X, was Y. Very easy mistake to make. Now corrected, obviously, because that could have cost me a fortune. Glad we didn't get hedged today. I know. Right. Let's have a look at FX. So far today, we've had some ADRs on the Aussie, Swiss, and the CAD Swiss. So basically, we've had some decent movement this morning, basically Swiss franc related. Oil this morning, we just start off with oil, hasn't gone anywhere today. Again, so then we're now in sort of day 4, really, if you like. We had this drop. So it's 1, 2, 3, 4 sideways. So we are completely stuck. So basically, after the drop Monday last week, oil's kind of not really had any direction. So I'm still in it. Still got the 4 positions on. Still waiting for the next leg up, but we're not going anywhere at all at the moment. The Canadian dollar's not really got any news this week either. So we've got the GDP figures coming out tomorrow, but GDP's really hit and miss. It's a reactionary indicator rather than a leading indicator. So doesn't tend to do an awful lot of that. So we're kind of waiting for the US numbers to come out to rally or to dump, and that will obviously drive the Canadian dollar as well. We've got the unemployment obviously Friday, so there's literally nothing until Friday basically for it. So oil basically is sideways. So when we're looking at things that are related to the Canadian dollar, like the CAD Swiss, which we're going to look at in a minute, need to be aware of what oil is doing, because obviously that's major export for Canada, oil. So when this is going up, the Canadian dollar is rallying. When this is dropping, the Canadian dollar is dropping. So we're just trying to break out the highs again on the NASDAQ. Having another go at those highs. We've got an inside bar on the Dow. Look at that. Straight up to target, straight down to break even, all in one 5-minute candle. Nutty market today. There wasn't any earnings either. We had McDonald's pre-market, that's it. So it's not, this isn't earnings related. This is just market going nuts today, which is fine. It's allowed. So we're just trying to break that high on the NASDAQ, but running into a little bit of pressure there. Dow's about to go. Trying to anyway. Come back to that in a minute. So Aussie dollar Swiss hit ADR, big hits to the upside, straight back down again. So we had a reversal alert straight off of ADR, look, and it hasn't retested. It's just collapsed back down. Dropped back down into the previous resistance, and we've had a little bounce there, but this looks like it wants to come down a little bit more. CAD Swiss, same sort of move, straight up into ADR. Reversal alert, there's your M pattern reversal. Big, nice, quick drop down. So that one's a nice reversal. You've kind of missed it. You had to be in it at ADR today on that one. And Euro Yen is the only other ADR we've had. That one's just given a reversal alert. No, sorry, hasn't. I thought we did have one on that. Must have been something else I was looking at earlier. So yeah, no reversal alert on this one yet. Hit up into ADR, just starting to reverse. Going to get a reverse alert coming in there. So that's a decent short to take, the Euro Yen. Wouldn't have a problem taking a short on the Euro Yen. We looked at some of these this morning that were extended to the downside, these yen pairs, because we had some RSI extensions on the hourlies, on the yens and the 4 hourlies. Didn't want to take them long, but nice big break up today. So would be happy to take that short because we're waiting for some intervention to come through for the yen. US dollar yen gone absolutely nowhere again today. So that last intervention that we had on Thursday seems to so far have done the trick. Friday we did get some strength. We double bottomed this morning, and we've just double topped with the Asian high. So potentially this move now is going to be a high, low, putting in some kind of lower high in this propulsion gap and then moving down. We haven't got to it yet though. So still like it short. We're going to have to wait for some US dollar news to come through this week, aren't we? So there's your ADRs. There isn't any weekly ranges. Nothing's hit weeklies. RSIs are pretty much the same as they were this morning. We have just broken out the highs on the NASDAQ and the S&P, but I was going to say it's struggling, but it does look like it's thinking about going now. But we're still inside bar on that initial Dow, but we are pushing up again. So market's still trying to rally higher. Running out of steam a little bit here, though. NASDAQ break. Did anybody get on this today, on the NASDAQ? And that would have been pretty tricky to get on because this thing went like a steam train, didn't it? Did not pause at all today. Where's the target on this? 41.71. Option gap. So I'm just putting a TP in place. Manual trading. When you've been using an EA for such a long time, it's really hard to do manual trading. You have to work. Can you trade the pullback strategy on the 1 hour RSI with the 5-minute time frame? Can you trade the pullback strategy on the 1 hour RSI with the 5-minute time frame? What do you mean by the pullback strategy? You mean the trend one? You could do, yeah. You could adapt that to the hourly. It works off of the 4-hour trend though. So we don't have an hourly MA. So this is the daily moving average. The 2472 is the quarterly and monthly moving averages. So those are what's displayed on the 4-hour chart. So you could trade H1 RSI extensions in line with the higher time frame trend, which is just the daily 2472, yeah, and just use H1 M5. There's not a lot in it. H1 M5. The reason I have those two variations on the mean reversion strategy is because some people can't trade H1 because you have to check the charts hourly. So anybody that's working full time, the 4-hour strategy is much better because there's only 6 candles a day, isn't there? 4, 8, 12, 24. Let's check that. There's only 6 candles a day. So it's really easy to trade H4 M5 or H4 M15. But yeah, in theory, you could trade the hourly. You're going to get into more positions on the hourly version. Yeah, if you want to trade just in line with trend, that's fine. Obviously, just bear in mind that that's only 20 to 30% of the time. The rest of the time, the market is in mean reversion, as in range bound. So I just don't particularly like it. It looks great here, but that's not many markets, is it? Most markets don't look like that. Most markets look like that or like that. So here you're going long. Here you're going long. That's totally wrong. Here you're going long. It's totally wrong. Here you're going short. That's okay, but that's going to go wrong. So everything's going to go wrong because with a trend, whenever you get into a trend trade, you are always going to get in at some point when the trend is ending. And that is always going to be a drawdown position. So for me, I kind of dumped the trend variation because it just didn't really suit the way that I trade. But nothing wrong with it. You've got to have a reason to trade. So if you want to use the trend one, use the trend one. Nothing wrong, nothing right. Dow's broken out that 5-minute range now, so we have actually made a new high on the day on the Dow. NASDAQ's screaming away, S&P is screaming away. I hate it when you have a move like this that is just solid buyers and no sellers at all, because the profit take move is very, very, very quick when it comes. Just worried about getting caught on the wrong side of this one. Gundo, entry for the NAS. I didn't get in on the NAS today, no. Range was too tight for for the pre-market, and the post-market range was too large. 10 to 20% of ADR is what I like to trade in. I'm going to close one out on the Dow, on the S&P. Again, I'm closing early. It's only 1R. And I'm just taking that off, half of it. Just because of what's happening on the Dow. Yeah. So this might be too soon, but I'm just closing that half of that out because the Dow is rejecting the highs. Look. Pen. So we've got a big bearish hammer shooting star just gone in on the Dow. And we've had a solid like 20-minute rally on the NASDAQ. They're going to start to take profit on this soon. And what I don't want is them to take profit and then reverse back down for that gap fill without having taken some profit on the S&P. So getting out a little early on it. This is the reason, basically. So that was as far as we could push at the open on the Dow. We've taken 20 minutes now to try and get through that level again, and the sellers just basically slammed straight back down on top. So all the indices may well react in a similar way to that. So that terminal's just connected. It is still long at the moment, though. Close. Break even second half. We're getting some. Oh, no, sorry, I was looking at the wrong table, the wrong chart. What a day! Done 3.7% over there, 5% here. Might as well take the rest of the month off. There's only one more day in there. David, I trade the trend variation. The trend will soon end. However, you would still get in at an extension of the RSI, meaning you're trading all extensions. You would be in either way. Use different MAs and go based off the H4 using RSI extensions on the H1. There's all sorts of variations you can do on it, but all you've got to remember is, yeah, it doesn't matter what strategy you use. I give you some strategies to use out of the bootcamp, which are based on RSI, and the trend one obviously is based on moving averages. You can, position trading is a methodology. You can trade it any way you like. It doesn't matter what time frame you use. It doesn't matter what indicator you use. The premise of position trading is we do not know when price is going to turn. You cannot. There is no indicator or anything on the planet that's going to tell you where this is changing direction. So if you don't know where it's changing direction, the whole purpose of position trading is stop trying to predict where it's going to turn. Just get in. Yeah. Whether you use that, a Bollinger Band, a CCI, a MACD, whatever you want to use, doesn't matter what you use, whether you use a 24, 72, a 200 moving average, a 50 on the hourly, use anything you like. It's all going to fail. Yeah, and that's the reasoning, isn't it? Everything is going to fail. The only thing I would say is you should be using some kind of signal indicator that is based on strength. Yeah, there's a lot of indicators out there that draw arrows on charts. This one is a little different in the fact that it takes 15 to 20 minutes to give you a signal, and that is after price has moved. Obviously, all indicators lag the market, but this one is telling you there's been a structure break, i.e. the sellers have taken control of the market. What the condition indicator is doesn't really matter because the sellers have taken control, so we go short. If this is the right time, brilliant. If it's the wrong time, doesn't matter what other condition you've used, it's wrong. So use anything you like. There's no right or wrong. Once you've done it for a bit, you'll understand. It doesn't matter. I could switch over now to a CCI, or I could change to a completely different RSI, and I could use two different moving averages on the daily chart. I still would be wrong most of the time because I have no idea when it's going to turn. I can tell you when I think it's going to turn based on historical information like we don't often get much further away from the moving average than that. So it's likely we're going to get a pullback, but I've seen it go further. When we get extended below the 20 level on the 4-hour time frame, it's very rare you don't get a pullback. I have seen it though. So it's still going to be wrong on certain instances. Just get in. Pick anything. Amend it. You know, you can use my strategies and just change every setting in it, and you will be as successful, better, or worse than I am. I don't know. It's nothing is in stone, is it? Market's stalling out a little bit at the moment. But yeah, use anything. Doesn't matter. So we got basically a pause candle on the S&P, pause candle on the NASDAQ. The Dow put in a lower low and a lower high. But it's starting to rally again now, so we'll see. Thanks for subscribing, Joseph. Welcome aboard. Is there a set file for the trend version? Yeah, it's on the set files, which are linked from the product page. So down here, you got the set files. Whoops. There, the MRA set files, and one of those is this one here, which is the trend pullback. It's called GUM15 trend pullback.set. So that set file is the trend based one, and all it does exactly the same as the normal H4 M15 mean reversion one, except it uses the H4 RSI extensions only in line with trend. So if we're trending down, it will only take RSI extensions to the upside. If we're trending up, it will only take RSI extensions to the downside. Yeah. So basically what it's doing is it's trying to get you in on the pullbacks short. Yeah. So we're only going in that direction. Whereas the normal H4M15 or H1M5 mean reversion set files, it doesn't look at trend at all. It just gets you in when the RSI is extended. Yeah. Because we don't know whether the trend is going to continue or not. Yeah, if something's been trending and it's gone down like that, and you enter on that H4 RSI extension to the upside, that could well go down and do another leg. So whenever you get a trend, for a trend to have formed, you've got to have at least 2 down legs. Because when it goes down and has pulled back and then goes down and breaks that level, you've confirmed that market structure is short and you've got a trend. Whether or not that is going to do that or that next, we don't know. So, and this is why the trend, look at this one here on the screen, look. High, low, lower high, lower low, higher, high, higher low. Yeah, is that changing back the other way? I don't know. Does it matter if you took that one long? No. This is why I didn't bother. I don't personally bother with trend, because every trend will come to an end, and every trend, if it's strong enough, will give you a pullback big enough for you to get out in mean reversion anyway. So you can trade either way in a trend. I can long a trend. Probably got some actually. Trying to think what I've closed out recently. There you go. This is a perfect example. Look, this is trending down. Yeah. It's trending down. Huge downtrend. What have I done? Longed it here. Yeah. Totally against the trend. Totally against the trend. Doesn't matter, does it? As long as it pulls back on its way down, I'm out. Doesn't matter. You don't need a trend. But up to you, obviously. Use whatever you like. S&P's just rejected the highs. We've just put in an outside bar. NASDAQ's lower low, lower high as well. Dow total rejection of those highs at the moment, and the DAX is just starting to drop. So we are starting to run out of steam up here. This could be a really big, fast sell-off today as well, because we've got this gap fill to the downside. So this thing could just turn and go net and collapse. We'll see. Obviously, it can go wherever it wants to, but hate longing against the gap. David, right, have all your indicators, still looking forward to buying the hedge. And I've been trading the trend pullback. Yeah. Nothing wrong with the, as I say, trend pullback. Everyone wants to trade the trend. The reason we like to trade the trend is because we're told to trade the trend. Everybody says the trend is your friend until it ends. Then the trend's not your friend anymore, is it? It's the most silly saying in the world. The trend is your friend. So what are you going to do? Like everybody says to me all the time, I get this probably twice or three times a month now. The opening range breakout EA strategy looks really good. The only thing missing from it is any kind of trend indication. Really? So if it's been going down for 2 days, that means it's going down today, does it? No. It can go where the hell it likes. Look, went down that day, went down that day. Where's it going today? Up. Oh, crap. I should have shorted it, shouldn't I? No. Go where it goes. Trend's got nothing to do with today. Just because it's gone down for 2 days has got nothing to do with the direction at all today. The trend is not your friend. It is only your friend when it's your friend. When it's not your friend, it's your enemy. Is it going to be your friend today? I don't know. It's a 50-50 shot. Out of the DAX. Sorry, out of the S&P. Over there. Sorry, I'm out of the S&P over there. I'm still in it here. I've got way too many charts open and way too many accounts I'm trading at the moment. I'm getting confused with my own stuff. I like trading solely for less positions. Yeah, so that is the advantage of it. If you are trading in line with the trend, you are going to know which way your exposure is. And most of the time, if your trend, and this is the other downside to trend trading, it's an upside and a downside if you think about it. If Euro US dollar ADR hits the upside on Euro US. So yeah, look at this as an example. This is in a downtrend at the moment. And it's good because you'll find, obviously, Euro US dollar is trending down. If you look at the pound US dollar, that is also trending down. If you look at the New Zealand dollar US dollar, that is also trending down. If you look at the Aussie dollar US dollar, that is also trending down. Now, if you're only trading in line with the trend and the US dollar suddenly massively devalues, every single one of those pairs is going to go up. So if you are only exposed in that direction because you're staying in line with the trend, everything is going to go into drawdown at the same time. And everything is going to make profit at the same time. So all the time that thing is moving, it's great and it's happy. Everybody's like, wee. When it goes wrong, it goes really wrong, all of it at the same time. Trends all will end at the same time because it's usually one currency is dominant, and that currency, when it becomes undominant, everything switches at the same time. So it can be a double-edged sword as well. Just got to be careful. But like I said, I can be long on the US dollar and short on the US dollar at the same time because I'm not using a trend. And that the advantage of that is it doesn't matter which way the US dollar goes, one of those positions is going to go into profit. YJ, UJ, GJ, why is everybody shouting yen at me? Big move on the yen. Another big order coming on the yen. I'm now out of the S&P properly. Markets have just come full circle back down again. There we go. So we're starting to sell off now. So this is either a pullback continuation or it's a shift in structure. One of those two things is going to happen. Yeah, a bit of not intervention. This isn't big enough for an intervention. This is just something happening on the yen. Oh, here you go. Readjusting yield control to revise interest rate control, making long-term interest rates more flexible than 1%. This is what I was talking about this morning. If you guys were in here this morning. So with the Japanese, they have had a negative 0.1 interest rate for 6 years now. Rate announcement is coming out tomorrow morning. They are constantly talking about potentially moving away from a negative interest rate because obviously with all of their investment overseas and none of it in their own country, they've been actively discouraging investment for years. They are talking about shifting over to a more Western approach, which is basically us having interest rates positive, trying to attract investment into the country and making our citizens keep the money in the country. So that's to do with that as well, and the yield curve basically on their bond purchases and stuff. So it's all bullish every time this sort of stuff is talked about, but we'll see. So another big move coming through on the yen. Woohoo, hello. I mean, ADR on the US dollar yen. There we go. So now I'm back below my average price, but I won't be in profit because $850 of my position is swap. So although that is now down below my average price on the US dollar yen, I'm still in negative territory because it's all swap. That's how much money I've spent in swap now, $750. Terrible, isn't it? I've got to get all the way down to here to get break even. Awful. Right. So we'll see what the market makes of that. Obviously, we can see they're buying up the yen. If that does turn out to be true and something they're going to announce tomorrow, we're going to get a big move on the yen. Not today, but tomorrow. 125 ADR, US dollar yen. Nice moves. So hopefully none of you took that long this morning on the yens that we were looking at. It was the Swiss yen was the other one, wasn't it? RSIs, basically, it was the Swiss yen and there was another yen. I think it was the CAD yen that was extended on the 4 hour. Yeah. So these are the two that I said don't take them long because obviously we're waiting for an intervention move to go short. So quickly, while we're talking about RSIs, Aussie dollar CAD is extended on the 4 hour still to the upside. I've got one short on that from Friday. That's first entry on the H1M5 mean reversion strategy short. Aussie dollar Swiss is also extended on the 4 hour, only just above the 70 level. Nice reversal candle going in there. I'd much rather this got a little bit higher though, and kind of came up into this sort of territory. 125 ADR, that'd be a much nicer place to take a short on that one. It is extended though, just about. Aussie New Zealand is extended to the upside. I've got shorts on this one. I mean, this is totally range bound. So at the moment, we're just in a range. I was expecting a continuation short back down into the bottom of the range, and what we got was basically a little push up into those highs. So we've invalidated that high now. If that doesn't come back down from here, we should get obviously nice move down. If it does, we'll be looking at coming back up into these highs here. So we're looking at a 225 ADR move against. So probably another 2 or 3 positions on that Aussie New Zealand before it comes back down again. But we'll see if this actually breaks and holds above this level. Swiss yen, we just looked at. Don't really want to be longing anything against the yen at the moment. Euro CAD is extended on the 4 hour. It's only just, again, nice divergence there. No, it's not. Forget that. It's not divergent at all. I don't know what I'm talking about. Yes, I do. Wrong divergence. I can see divergence on the chart, and I automatically drew it in, but wrong divergence. So the divergence is there and there. Yeah, so it's bearish divergence, M pattern reversal starting to go in. So again, Canadian dollar should be strengthening up with oil, assuming oil gets that rally, which we're not getting at the moment. Euro Swiss extended again to the upside on the 4 hour, also extended on the hourly, only just though. So I got out of this one. If you're in the live room this morning, I put a break even on this trade this morning because I was wary about the Swiss franc getting squeezed basically further with what's going on in Israel. It took me out this morning, completely reversed that entire move. And obviously, as you can see, it's flown out the highs. So that is extended to the upside. I'll let the EA get me into this again. If we do break up above the 75 for the second time, I'll let the EA get me into another short on this. I'm just wary about the Swissy at the moment because of obviously what's going on with Israel. There's a big potential for the Swissy to power up. But if it all just grinds over there and we don't get any escalation, the Swissy, they'll just pull all that money they put into the Swissy back out again. So it's could go either way. So I'm being a little cautious with the Swissy. I've got a lot of exposure on it at the moment. So that one I got out at a break even on this morning. But it is an opportunity to go short. You've just had just shy of ADR on that today. There's your reverse alert just gone in. Your retest. So looking for a continuation back down into that area at least. And the only other thing you got extended is US dollar Swiss. Very much the same sort of thing with the US dollar Swiss. Could go either way. Just had a reverse alert on that one off of the weekly highs. So that's the high from 2 weeks ago. That's last week's high. And we're obviously in a downtrend because the Swiss franc's been powering up. But this, obviously, we've got FOMC this week, so this thing could go absolutely anywhere. But extended at the moment on the 4 hour RSI, which is, you've kind of missed it. You needed to be in this morning. Up here. So yeah, there's your RSI extensions. Most of the stuff is stuff that I'm already in anyway. So that US dollar yen looks like it's pulling back a bit. There we go. So big rejection off the lows there. No more news. What's your squeeze drawdown limit? I don't really have one. Don't really have a squeeze drawdown limit. When I'm uncomfortable and I think this is really bad, I should get out. So you can't put a financial amount on it or a distance amount on it. It's just, if it looks wrong, get out. If you're uncomfortable, this is what I teach in the bootcamp. If you're feeling uncomfortable, get out or reduce or whatever. Everybody's got a different comfort level. There's people trading in the Telegram group who are happy for their accounts to go into 25, 30% of drawdown. And there are other people in there that as soon as it gets to 5% and drawdown, they panic. Yeah, what's your comfort level? When do you think something's too big? Up to you. And that's only going to come from experience as to you getting into drawdown. When you've been through a couple of squeezes and you've been like 3, 4, 5% drawdown on an individual instrument and it's all come back and you've made 2, 3, 4% out of it, you have a lot more faith in a system or a strategy, which is why I always say to people, put it through the strategy tester. Use the market reverse alert CA in the strategy tester on different pairs with different strategies and see how much squeeze you get. The only time you get into real big trouble is if you get squeezed on multiple instruments at the same time, which is why we have exposure limits. Yeah. If you keep within decent exposure, you'll find it very hard to get squeezed to any level that would be account threatening. Because the market cannot sustain the squeeze indefinitely. It has to take profit on the squeeze because the people in the squeeze or people that are doing the squeeze have to get out to make money. you will get out with them. That's the whole point. This is why we trade the way we trade with mean reversion, because we know mean reversion happens because bank profit taking moves occur. So if they don't take profit, we don't get out. They will always take profit because that's what banks do, constantly make profit. And the only way they can do it is by exiting their positions. So your job is to survive the squeeze when they happen. And again, everybody's got a different definition of a squeeze. We'll say everybody. I mean, my definition of a squeeze is something that is gone on for over a month and is just not looking like it's going to stop. There is no textbook definition. A squeeze is a 4 ADR move over a period of X time where you have X positions on or your account is in XYZ drawdown. The squeeze is just a really strong move. The pound US dollar squeeze that I've just got out of and I was in for months. Yeah, that's a squeeze. I got out of it last week after being in it for 3 months. Some people would have gone, holy crap, I'm really being squeezed here. Others would have said, I'm being squeezed here. I knew it was a squeeze by the time we got to there, really, or there. You know, it was a squeeze. It'd been going on for over a month and we're just not getting any pullbacks on it. You could say a squeeze is when the trade idea is invalidated. Yeah, so the trade idea is, as we get extended on the H1 RSI, we expect a profit take move. If it goes sideways like that and then pushes down, that initial idea of the profit take move is invalid. You're squeezed. You're in a squeeze. You could be in a squeeze after 5 days, couldn't you? There's no definitions of anything. Your position trading is position trading. You get into a position, it goes into drawdown. You wait for that drawdown to come back into positive territory before you take your entry off. Oil's collapsing. Not collapsing, coming down. So yeah, there is no specific limit, if you like. Normally, when I get to about 2.5%, 3%, I'm thinking this is wrong. I've got to do something about this. And there's multiple things you can do. You can reduce your lot sizing by taking some loss. You can do some drawdown control by reducing some other exposure. For example, the New Zealand dollar, I did some drawdown control on that today. Or you could just shut the position totally. Ooh, that market just really flushed. Big flush. That's this candlestick just really painted really fast. A lot of volatility today. Japanese throwing a spanner in the works today, haven't they? How long has your US dollar yen trade been going? About 4 weeks. So first entry was 26th of September. So yeah, a month. I've taken, I mean, I could close this now. I've had 2 profits on it. I don't know what the total profit on those was, but whatever it was, I could get out right now, take that $700 loss, and that will probably have paid for it. And I'll just get out flat and go, screw it, didn't work. But I cannot see the US dollar yen getting above this level. This is the intervention level. This is the level they do not allow it beyond. We've had it proven to us in the past. Last October, they would not allow it. Every time we get near it, they say you will not push beyond this level. And every time they try, they get an intervention move which says you're not. So I'm happy being short. And I think at some point, either the US is going to push it too hard and it is going to get that 800% intervention move, which is what we're expecting, or the market is just going to give up and drop it. So either way, I'm happy to hold this short. Look at this move today. I mean, if this carries on, this move that we've just had put in, as I said, that level is what I want to see broken. We've just done it. So if we can now pull back into this area here and then push down and make a new low, this thing's coming down. But that's the decision you have to make as a trader. Whatever those two positions are that I've made profit on. When did I get out of those? 6th of October. So I made $130 and so I made $450 on those two trades there. So just under 0.5%. And right now I'm sitting in $700 and something. So I could shut that right now and just go, I'll take a 0.3 hit on it. So it's a month's worth of wasted time. That's your decision, isn't it? Or you can hold this and go, this looks like it, and potentially take 3 to 5% out of it. Or I could hold this and go back up there and go, crap, I'm sitting in 3.5% of drawdown on it. This is what trading's all about, making those decisions. And those decisions are based on what you feel for that instrument that you're looking at. I feel it's going down, but I might be totally wrong. Every time it gets anywhere near a point where they don't want it to go any further, they hit it. And there's only so many times you hit something before it goes, yeah, all right, got it. That's what I'm banking on. And now the Japanese have come out and said that. There's a good chance that this could be it tomorrow. Yeah, we've got the policy rate, monetary policy statement, and the press conference. They're going to get questioned in that press conference. If they are in any way, shape, or form bullish, as they've just said today, that market's going to love it and it's going to buy the yen. And obviously, then we're going to get that rally started, which is possibly going to get completely undone when Powell starts talking at 6:30 on Wednesday. Could go completely opposite direction, couldn't it? We don't know. If only we knew. We're coming back down to the lows on the NASDAQ. So this is your initial opening cash balance here. So we're just coming down to retest the open, basically. S&P's already slammed straight through it. The Dow is looking like it's bouncing off of it. DAX is melting. So this market really not liking that yen. And this is money being pulled out of the stock market and potentially popped into the yen, isn't it? Do you think having a drawdown control of 1.5 ADR is too high? I don't know. It's entirely up to you, isn't it? I think if you there is no, you know what I'm going to say, there's no right or wrong. With automated drawdown control, I've tried 0.75. Test this in the strategy tester with the EA. Yeah, so 0.75 ADR, 1.5 ADR are the two main ones that I've tested. Anything lower than that, you're getting out too fast, too soon. Yeah, so the market spends around about, as we know, 60% of its time within average daily range. Yeah, so if you set it below an ADR, so 0.75 an ADR, there's a 60% chance that you will do drawdown control. Even if you just take one trade, there's a good chance that you will do drawdown control on that one trade. That's too quick. So what I was doing was using 1.5 ADR as my automated drawdown control. And the idea is if I'm scaling in 0.75 ADR apart, yeah, so take the first long there, wait 0.75, take a second long there, wait 0.75 to take my third long. The idea is that by the time I get into my third position, long, yeah, I want to be taking off some of the very first one. to reduce the drawdown and bring the average a little bit closer to price. So that's the theory behind the 1.5 ADR drawdown control, automated. The downside is, as I've probably said before, the vast majority of my trades have 3 or 4 positions. So what I was finding was, by the time I take my 4th position, you can see all of these trades here have got 3 to 5 positions on, 3 to 5 trades on the position. As soon as I do that drawdown control, that's when it pings back. So I've just taken a loss just before the move happens, which is pointless because the move's going to happen regardless, isn't it? You've just got to pick one. Automated drawdown control means you have less drawdown, but you will take more loss. There is no, it's up to you. I can go 50% drawdown. I blow up 3 accounts in 3 years. Okay. Don't know what to say to that one. You've blown up 3 accounts in 3 years. It's obviously not position trading, is it? Yeah, now looks more attractive as a safe haven. It will do, yeah, very much so. That's the other good thing about the yield curve. If they are looking to increase the yield curve and potentially change that interest rate, I don't think they will, but if they're talking about it, it's going to make it more attractive as a safe haven again. The Swiss franc and the US dollar have really benefited from the fact that the yen has been a really bad place to put your money. It is still somewhere safe to put your money, though. But they just don't give you any return on your interest. So, you stick money in there, you will lose it. This is why they have it as they have it. But think about it from an investor's perspective, right? If you've got, let's say you've got 10 million to invest, or in investments, that you've got 10 million, it's sitting in a diverse portfolio across stocks, commodities, bonds, everywhere. You've just got your investment out there as 10 million. If things are going to start to hit the fan, we've got COVID coming up, we've got this coming up, there's a war kicking off there, there's one just kicked off there, there's a financial crisis coming, whatever's happening, yeah, and you've got 10 million, what is your goal as an investor? Preservation of capital. Number 1 rule in investing, preserve your capital. If you can't preserve your capital, you are no longer an investor. So what's the best thing to do? Put it somewhere safe that's going to lose as little money as possible. So if I have a guaranteed vehicle out there that is going to return me a 0.1% loss on my 10 million, I'm taking it, because everything out there is riskier than the Japanese yen. That's why it's a safe haven. You are guaranteed to lose no more than 0.1% of your investment if you stick it all into the yen. If you stick it in any other currency that is fluctuating and manipulated, or any other commodity or stock that is potentially going to get hit by anything, COVID, if it's a stock, it's going to get hit by COVID. It's going to hit by wars. It can be hit by floods and earthquakes. And, there's so much can go wrong. You could have a board member go crazy. There's a million threats. In the yen, there's no threat. You're going to lose that. That's the safest place to put it. And this is why safe havens work. Why the Swiss franc works. If you stick your money in the Swissy at the moment, you're going to get 1.75% on it. That's absolutely nothing. But it's the safest place to put your money because their economy is sound, their government is sound, their leadership is sound, they've got no unemployment. It's just a stable economy. Where do you want to put your money? If you don't want to earn a load and don't want to lose a load, put it somewhere stable. Swiss franc. What else is stable? Gold. There's not a lot of it. A load of it is tied up in Russia at the moment. So if there's a supply and demand issue and you need it for every electronic component manufactured and known to man that requires gold, including car components, the biggest second outlay we have in our entire lives, where do you put it? Gold, because gold is going to go up. Oil is going to go up. The US dollar is going to go up because US dollar is the world's currency. Over 50% of transactions worldwide are in the US dollar. Where else are you going to put it if you want it safe? The biggest currency in the world. Yeah. So this is why these things are attractive when there's times of crisis, and the yen will become more attractive if instead of you getting a negative 0.1, you're going to suddenly get a positive 0.1, it's like, I'm not going to lose money anymore. I'm going to put it somewhere safe and make money. Even better. This thing will become the dominant safe haven, which it has been in the past. But world events change. You know, this is why you have to keep on top of it. It changes with the wind, basically, at the moment, isn't it? I lost way too much on automated DD control this month. Decided to turn it off. Yeah. If you automated DD control in a move like that, which we're getting a lot of at the moment, a lot of these, yeah. Automated DD control, what it does is it takes loss, doesn't make profit, takes loss, doesn't make profit, takes loss, doesn't make profit. It will make profit. But when you get these month-long moves, which we seem to get where we're not using market structure, we're stepping. That's where it is nothing you can do about it. You just have to slowly hemorrhage cash. It's just, yeah. Not normal. It's not normal market conditions to do that. It's getting more normal, though. You know, this is why you need to diversify a little bit. We are looking like we're rejecting the NAS lows at the moment. So this is the pre-market low on the NAS, which we just tapped into to the pip. And it's also the low of the initial cash balance today. So this could be an area we start a pullback from if you're looking for a quick scalp long. This thing's a Looney Tune today, so be very careful. We could just be sitting in a big, wide, whippy rotation day. But like I said, when you got a gap, gaps like to get filled. Do you think the DAX is heading to fill the gap? Yeah, probably. Is now. So if you want to get in on this move, you're going to need to wait either for a pullback or some kind of accumulation you can take a break short on. So wait for a range to form. So that low there, we just do that, and then we push up a little bit, and then we come down, and then we push up a bit, and we come down, and we sit there, and we do this and that. Get a nice range formed, take that break, flush it down to there. I'm done for the day, though, because I fat-fingered a nice 6% profit. Whoops. Nice when you fat-finger things like that, isn't it? Not as nice as fat-fingering things that go wrong, which happens as well. 50% of Friday's 5-minute opening is holding. Pass. Brian's got a theory. Use it. If you think it works, use it. I can guarantee you it's got a 50-50 shot of working, because sometimes it will work, sometimes it won't. You've got to have a level. Pick a level. There's always a level. Every level, whether it be Friday's open, whether it be pre-market high, yesterday's high, some old weekly level you've drawn. Yeah, wherever it is, whatever you use to draw a line on your chart, the odds are the same. Always. That's a nice drop as well. So there's a very high probability of a pullback into propulsion if we're going to go down. See where we go. But I'm done for today. Anyway. We're holding this high as well on the Dow. Look. The potential pullback. The 50-50 system always works. It does, always works. That's what trading's all about. It's not trying to find a system or a strategy or an indicator that's going to predict the future. It's about understanding that everything in this business is about risk. And you basically just manage your risk based on flipping a coin at the end of the day. But you just need a reason to flip the coin, don't you? For me, I like flipping the coin at the open because it's either going to go up or down. But I know when. That's the difference, isn't it? The opening range breakout strategy has got an edge in the fact that we know when. We don't know which way. Which is why everybody trades the open. This is rejecting very nicely. So if you're me, you are watching limit orders triggering at that low before the open. And you're seeing the initial cash balance getting bought up. If you're Brian, you're seeing yesterday's opening or Friday's opening candle, half of that getting hit. If you're someone that isn't watching either of these two and you're watching the Dow, you're watching the high before the open getting bought up. So you're seeing a market structure continuation move. See what I mean? I can give you 3 reasons why this is going up at the moment. None of them related to each other in any way, shape, or form. Doesn't mean anything, does it? Nobody knows why this is going up. It's just going up. Think of a theory. Pick one. This is what conspiracy theory is all about, isn't it? Who knows why it's going up? It's going up. Why is it going up? Well, because it's pulled down for 4 candles. There's somebody else somewhere on this planet right now, I can almost guarantee it, going, hey, the 5 down candle rule is playing out perfectly. What's the 5 down candle rule? Well, if you get 5 consecutive candles and they're all in one direction, it's almost guaranteed to pull back. 1, 2, 3, 4, 5. It works. Pick a reason, any reason. Brian's out. Good man. As long as you're banking profit, that's the important thing. Who cares why? Any Black Friday deals for my indicators? Yep, everything will be 99% off. I don't know. When's Black Friday? I usually do a Black Friday sale. I don't know when it is, though. I usually wait for everybody else to tell me the Black Friday sale's coming up, and then I go, oh, it's Black Friday, and I will do a sale on. I usually do. Mumo, you've made 4K profit on the Dow, still risking 0.2 to 0.5 per trade? No, I've never risked 0.2 to 0.5 per trade. I risk 1% per trade. And today, that was an accident, because I accidentally put the lot sizing for the S&P into the Dow. So that should not have been that. That should be more like 1.5. I'll tell you what it should be. Today, my P&L should be 3.95%. That's what I've banked over there. And that account's running proper. So that's a little bit extra because I did the lot size wrong. But the risk is the same. The risk is the range. Yeah, it's just it would have been if we'd have hedged this today, I would have locked in a hedge at around about 3%, 3.5%. So double the risk, really. There's an accident. A nice accident, exactly. Some of the best trades are accidents. You know, it's like I say, it doesn't matter why you get in. Yeah, I have in the past, and everybody else has probably done this as well. I have in the past gone to take a buy and hit the sell button, and then I've gone orders in, brilliant, gone off, come back, and I've gone, wow, it's in profit. Hang on a minute, how can it be in profit? Oh, I hit the wrong button. Never mind. What's playing out there? The 50-50 rule. I was wrong on the trade and it went down and I still made money. Yeah, I could have been the other way, couldn't I? Yeah, I had no idea which way it was going. I had to press a button. This is where this thing comes with everybody's like, all you've got to do is go out there and find a strategy that doesn't work. And instead of buying it every time it says to buy, sell. The odds are the same. Still going up or down, isn't it? Nice accident. Brian, I'm on a static account today. You've got to keep my wits about me. How's the 750 account going? It is now 824. This is the 750 account. Up 10%. In 3 days. Yeah. It's basically just taking the same. I'm doing the same, pretty much the same as I'm doing in front of you here on that account. I might just be a little bit behind or a little bit ahead because obviously I'm closing this, and by the time I get there, it's going to be different price. What lot size am I using on that account? It's just 1% risk. So I don't know whatever lot size it. 1% is still base. It's all calculated on the range, isn't it? So. Trevor, I'm new to trading, listening here for a while, visited your website and looked into your bootcamp, but all complicated. I bought the Wacka EA. That's a shame. But it does not perform as promised. No, it won't. Because everything you'll find on MQL5 Marketplace, not everything, because I sell stuff on there, but 90% of the stuff you find on the marketplace is what we call curve fit. So they are rip-offs. If you look at the Wacka EA, I don't know the Wacka EA. I've seen it. So he gives you this, yeah, and tells you it's made, or she. It's not a woman, it's a bloke. Gives you 3,000% return, yeah, over 50 consecutive months, yeah. And they give you this lovely big profit curve. If you look at these drawdowns, you'll find they're hideous. All of this can be manufactured very easily. Yeah, by curve fitting. So I'll give you an example. So this is some backtesting on the stock index Hedge EA. Yeah. So I've backtested here. 150 variations of the stock index hedge strategy. Okay. So what I will do is this column B here, I'm going to sort that by price, largest to smallest, which gives me a $313,000 return. And I'm going to publish that version of the EA. And I'm going to show you the backtest results. I'm going to show you what time period it was done over. And I'm going to show you all the information that produced that result. You're going to put that onto your chart and replicate that result and go, holy crap, that's amazing. But what I won't show you is all the way down at the bottom of this spreadsheet, there is a variation of this strategy that made $95. Exactly the same strategy, except there were a couple of different settings in there that produced $95 over the same period of time. I'm not going to show you that. I'm going to show you the version up here that you want to buy. And then you're going to put this on your chart, and it's not going to give you any of these results because this is what's happened in the past. And this is never, ever going to happen again in the future. The exact formation of candlesticks, the distance of those candlesticks, the size of them, the wicks at the tops and the bottoms of them, and the price that they originated from at that time will never, ever be repeated at any point again in the future. So all you're seeing here is if you had have done this with that exact setting in the past, that's what would have happened. But going forward, it's a 50-50 shot every time you place a trade, and none of it's going to happen again. That's the reality of trading. Yeah. That's what the real world is like. So all this crap that they show you here and all these back tests, why do you think here as well? Look, supported currency pairs, Aussie CAD, Aussie New Zealand, and New Zealand CAD. Why do you only trade it on those three? There's 28 FX pairs. What's wrong with the other 25? I'll tell you what's wrong with the other 25. It made a loss on every single one of them. He couldn't get it to produce a result on the other 25. So he went, well, we'll chuck those away and we'll just give them those three because it works on these three in the back tests. Why does it only work on the 15-minute time frame? Because the strategy is not robust enough to be performed on any other time frame but M15 because he tested it on H1 time frame and it blew the account. So he doesn't tell you to trade it on that. He tells you to trade it on M15. And then everybody that buys it, he says, tell you what, soon as you bought it, I've got a magic set file that's better than the ones I've given you. All you need to do is give me a positive review as soon as you've purchased it, and I'll send you that set file. So it ends up with a load of 5-star reviews for something that somebody's never ever used before, on the promise of getting a set file that's going to make them more money than the one they got in the first place, which also blows their account. 99.9% of the products you'll find do that. How do I know? Because I've bought them. I've done this for 15 years. I have bought, I wouldn't say hundreds, not hundreds, a lot. And I suddenly became smart as a programmer and looked into the logic on how these things worked. And I've figured out exactly how they produce all these results. It's all crap, smoke and mirrors. None of it's working. None of it's real. Every single one of these. And this is why they give them lovely names like Razor, Profits, Neuro Start. Load of crap. It's all a load of crap. Yeah. Look at this. Look at this here. Yeah. This is the Waka Waka, right? Evening Scalper, Night Hunter, Relative Volatility, another Relative Volatility, Newscatcher, Evening Scalper, Night Hunter. So all this stuff made by the same bloke. If he had a strategy that worked, do you not think he'd trade it? Why do you need thousands of variations of the same thing? Well, it's not the same thing. It's totally different things, isn't it? It's just, if you're new, this is the biggest place you do not want to buy stuff from. If you are going to buy it, learn how to backtest, right? All of my products, I don't give you any results. If you look at my stuff on here, just trying to find, where's my stuff? You never see anything to do with results. I don't give you any results for anything. I tell you what this thing does and how it works, the logic behind the strategy, but I will never give you a result because none of the results in the past are going to be reproduced again in the future. I can show you what would have happened and how it would have happened, what it did and why it did it. But whether or not it's going to work, you can't give any guarantees of it. Yeah. Which way was this going to break today? Long or short? What's the odds? Yeah. If I gave you a back test where I tested it long only, and I picked a period of time where 70% of the time it broke long only, it would make money. If I then took it to another period of time where it went short 70% of the time, it would make a loss. So I'm only going to give you the one that goes long. The odds are 50-50. They're never going to play out in a 50-50 manner, though. You're going to get 10 winners, 4 losers, 6 winners, 19 losers, 17 winners. Yeah. So all you do is you pick a period of time and you just give the results for that and make it look good. And $2,500? There's no way this bloke has sold 36 of those at $2,200. If he is, he's not making money trading, is he? Let's face it. It's not the real world, is it? Just nuts, as somebody's just said. So yeah, Trevor, that's basically, and what you've just said, you visited the website, you've looked at the bootcamp, it's all complicated. Yes, this is finance. This is complicated. Yeah, the reason I have condensed 15 years worth of knowledge into 25 hours worth of education is because it is bloody complicated. This job is as difficult to do as a brain surgeon or a fighter pilot. There's no way you're just going to suddenly go, I'll buy that thing for a couple of $100 and make myself a Lamborghini. It's not going to happen. This is a very, very complex job with a hell of a lot of risk attached to it. Nothing that's just going to make you money. If it was, I would be doing it, wouldn't I? I wouldn't be sitting here. Well, I am doing it. I'm coming in here. I'm showing you exactly how to do it. But I didn't suddenly 15 years ago do a course and go, there you go, that's it, I'm done, mortgage paid. I've still got a mortgage. What lot size on the 750? Sorry, what lot size on 750 account? And when would you start drawdown control? This is the stock index hedge strategy. It's nothing. It's not position trading. There is no drawdown control. Is there any way to tell on MQL5 if the EA actually works? No. Backtest it. So download this Waka waka, right? Tell you what, let's do it. Let's do it. Let's do it live. There he is. That was easy, wasn't it? Download demo. Thinking about it, thinking about it, thinking about it. Still thinking about it. Looking like it's locked up my terminal. There we go. Okay, so we have Waka Waka. And we are meant to trade it on what? Aussie CAD M15. From January to December. So that's a year's worth of backtesting from 2018 to 2021. Market. Waka waka. There we go. So let's test it on the Aussie CAD, was it? M15. I've no idea what inputs to use. I mean, there's 1,000 inputs in here. I can't really produce a result because I've no idea what inputs to use. So how could I possibly test this properly without spending hours and hours and hours reading the manual or figuring out what the strategy does? Well, good, nice graphics. Looks better than mine, doesn't it? Slow. Let's just take it off visual mode for a minute and just run it. But this is all you can do to verify something, right? So all you can do is stick it in here and see what it does. Right, so it's not using a stop loss. 6 grand, 7 grand, 8 grand, 10, 11. Is that the end of the test? Okay, so it's made 10% with 7% drawdown. How's it trading? So it's basically doing Martingale. Right, so it uses Martingale. So Trevor, if you're not familiar with Martingale, basically Martingale is a gambling strategy where you double your risk. So it takes a 0.39. Yeah, if that trade works out, happy days. If the 0.39 doesn't work out, it doubles the lot size to 0.78. If the 0.78 doesn't work out, it doubles the lot size to 1.56. 1.56 doesn't work out, it doubles the lot size to 3.12. If the 3.12 doesn't work out, it will double the lot size to 6, then it will double it to 12, and then it will blow your account. Yeah. It will have a lucky run. It will always have a lucky run. There will be some point where this will just go like that and you won't have any money left because it won't be able to get the lot size on to make that trade work because your broker won't allow it. Maximum lots your broker will allow is 100. So it either won't be able to get the lot size on or it will just blow the account because it will hit a losing run, which is more than X, which the threshold is, whatever it is. Yeah. So that's how that one works. It's Martingale. Any robot you find out there that uses Martingale can be curve fit. There you go, 4.99, 7.98. If that trade there, that 7.98, hadn't have worked out, you'd be taking a 15 lot position. 15. Regardless of the size of your account. Yeah. So it looks great on paper and it will trade beautifully for weeks, maybe even months before it blows your account. But I don't know what the settings that should be used. So that might be really bad settings I've used there. It might be really good. That's low risk. Oh my God. Significant risk. Let's put it on significant risk and see what that does. Christ, if that was low risk and it was taking 14 lots on a 10k account, 100k account. See, look at that. I mean, that took a drawdown there of 8 grand to make whatever this tiny amount of money it's making is. Also, bear in mind, yeah, this is making money on a 100k account. This is banking 114. Yeah, so it's banking 0.1%. Okay, it's not taking into account commission. It's not taking into account spread. When you add the commission and spread into that, you won't actually get that result. You'll get a result which is somewhere in the region of 60 to 70% of that. So that equity curve that you see there, where it banks basically, I mean, look at it. It's banking $114, but it was happy to go into drawdown by 2,500 to make that. It's like position trading. It's very much like position trading. But because it uses Martingale, at some point, it's just going to blow the account to pieces. But look, what I was saying earlier, that's Aussie dollar CAD. Let's try it on CAD Swiss. Don't recommend it on CAD Swiss, does it? I might be picking the wrong time here, but it's just going to take, there we go, one of those. That lost over $50,000. That's 50% drawdown there. And the lot size it had to go up to was 64 lots. That just took a 64 lot trade on a 100k account to try and get itself out. If the next trade had been a loser, it's gone. That's why they don't recommend that you put it on the CAD Swiss. They won't recommend that you put it on the pound US dollar either, I wouldn't imagine. Look what it's making, like $90 every go. It's literally trying to scalp a couple of ticks out the market. It's relying on the market never going like that, which it will. We know it does. We've seen it many times. Look how good it looks on paper. But you won't get this condition. This won't happen in the real world. It's all curve fit to do this thing over the market that we've got at the moment, which is a bull calm market. Sorry, a bear volatile market. Yeah, looks good, doesn't it? But try it in the real world. You'll never get it. But I don't know what it's doing either, so I need to test it and see what it's doing. You'll find a way to break it somewhere along the line. When you're releasing the rocket, I've already told you the rocket. I've released it on Saturday, didn't I? I've released it. It's out there now in the open. The biggest secret the banks have ever had. I released it on Saturday in a video. Look at this. I mean, this US dollar yen. Yeah, let's just guarantee. Let's guarantee it. Yeah, that is not coming back up again. We have a 10-ton weight. Above that now, that is going down. Best strategy in the world. Works every time. Prove me wrong. Have I ever shown you a 10-ton weight or a rocket that hasn't worked? No. I've only done it about twice or 3 times, I think, and every time it's paid off. 100% strike rate. Get the free version of Agimat, same result, yeah. Most of these EAs that you'll find on here that have these profit curves like this, they are all they're basically HFT EAs, high frequency trading EAs. So what they're doing is they are basically extracting micro movements out of the market, which never take into account commission or spread. If you rerun them, so if I rerun that test that we've just done there, right? But I put into it a variable spread. Let's go with the 1 and a maximum of 5. We won't put any slippage in there. We won't put any commissions in there. See if it survives with a variable. It's a lot more rocky, isn't it, with variable spread. Still working though. Going to do pretty much the same thing in it by the looks of things. If you add in the commission, I don't know what the commission would be. I don't know what don't know how to calculate it, but if you add the commission in on that, on what it would cost, and obviously the overnight swaps, I don't know how fast this is trading, whether this is holding overnight. Obviously, it's not taking any swaps into account either. Spread, commission, and swaps, your 3 main costs of doing business. None of that is in the backtester. Same in my stuff. None of that is in the backtester at all. You can simulate it, but you're never going to get exactly the same results. I'm just going to change those back because I don't want to use those. For me, backtesting is about proving concept. Yeah. Is this a good idea to do this? Does it work more often than not? Because at the end of the day, you've got to be able to look at the chart and decide whether or not something's going to work. So if you're doing the stock index Hedge EA, for example, you can see today I've taken 2 trades today. This one I closed out early. That was my TP. That's where I closed it. Why? Because it was struggling. Yeah, I closed it because it was struggling. Why did I close the S&P? It was struggling. I got out at 1R. Target was 2R. It was, everything else. I saw the Dow coming down. We saw the NASDAQ stalling. I took it, and I was right to take it. But that comes with experience. You take that and forget the commission spread and everything else. The concept is valid. It breaks more often than it doesn't. Whether it gets to 2R or not, or 3R or 1.5R, they're all completely profitable strategies. But which one should you do on which day? You don't know. You've just got to eyeball it. I can curve fit a version of the stock index Hedge EA for you to give you the best possible results, but you're not going to get those results. You should actually code this in your EAs when your position goes against to whatever your drawdown is in ADR, prints a rocket or a weight, depending on the position. Sell it for 6K. Yeah. It's a joke, but it's a joke to demonstrate a real, very real world thing, isn't it? Yeah. We don't know where it's going, and you have to hope. You have to will it. Yeah. It's either going to go up or it's not. If you can do something to make it go up, like draw a rocket under it, do it. Not going to work every time, but just test the results. I'm dead curious. Yeah. The trouble is I would never buy anything that I didn't know what it was doing. And with a lot of these things, right, they never tell you what the requirements are hedging account. Oh, so it looks, oh, I know exactly what this is doing. Requirements, hedging account. So you've got to have a hedging account. So what this is doing is it's hedging over and over and over and over again. Yeah. I've tested this. I've tested this with the opening range breakout EA. So basically what this strategy is it's some kind of mean reversion strategy where it's either a mean reversion strategy or a breakout strategy. They are either doing that, entering, and then hedging if it doesn't work with double the lot size, and then waiting for the exit. If that doesn't work, they will then hedge it again with double that lot size. If that doesn't work, they will re-hedge it with double the lot size. So it's just basically Martingale hedging, which is, it works. It does work. And on paper, so you can see those equity curves. It does work. But at points, you will have drawdown where you will be papping your pants. If you haven't got a 500 to 1, with only 30 to 1 leverage, I would advise lower risk. I was just going to say, if you haven't got a massive leverage, you won't get those trades on. What you will get is a message from your broker saying, sorry, we're not going to let you put that one on. So what you'll actually get is a hedge where the only way to exit is to close one of those in loss. You just won't get those results because you can't. In a back test, it will work absolutely beautifully. In the real world, you won't get it because you won't be able to get the trades on. And you won't be able to get the trades on at those prices either. Trying to make a 0.1% profit without slippage is not going to happen. I didn't get slipped today, but you see me get slipped in here on a regular basis. Yeah, I get slipped all the time, don't I? Sometimes it's a positive slippage, sometimes it's a negative. Look at these two trades here on the US 30. Yeah, there's the entry, there's the actual entry. So I asked for that. That's what I got given. Yeah, difference between that and that. Yeah, then take off the commission, then take off the spread, then take off the swap if you're going to hold it overnight, and also take off the fact that you didn't get the price that you got in the back test, and you're trying to make that much money. It's just not going to happen. Never going to happen. But it looks good on paper, doesn't it? Really good. It uses mean reversion on those three pairs to lower the commissions. She then uses an account based on Australian dollar. See, everybody else in here seems to know how this works. They've obviously come across it before. Is there a live signal as well? Live performance. This is another thing. Yeah. 281 weeks this has been running for. This is in Russian. I can't quite work out what that is. 183% return in. You see, you can't take any of these into account because all of that information there is trading before the signal was put up onto here. How do you translate this into English? Maximum drawdown 22%. That's on account balance. So, yeah. So it's done 22% drawdown. So yeah, it looks good. I have to say it looks good on paper, but like you say, do this in the real world. It won't get these results. Is this a demo or is this a live account? I can't tell. IceFX. I don't know what that is, IceFX. Anybody heard of IceFX? Going well into this, aren't we? Ice markets must be then. Yes. So they're an A-book only broker. I've heard of them before. I like the sound of them. Where are they based? Malaysia. I'll bookmark that one and keep that one. That's a good broker. If they're whether they say, I mean, this is the thing, they say they're A-book only, but whether they are or not would have to be demonstrated, I guess, over time, wouldn't it? But yeah, anyway, yeah, it looks good. But like I said, you'll never get the results. You'll never get the same thing out of those things. Ticking time bomb. The thing I can't work out on this one, I have to say, Euro Swiss ADR. Lots of ADRs going off today. Swiss franc weakening. The only thing I can't work out on this is how this signal is standing up. So all of these results up until May 2021 are are, you can't take them into account because they didn't happen. They weren't verified by the MQL marketplace. So, but all these ones after look pretty good, don't they? But this is the one that's on tiny, tiny, tiny risk. So I'm just trying to figure out what the capital is. It's 5,000. It's made 10 grand. So it's made 150% off 500. Yeah. So it's using super, super tiny lot sizes, isn't it? Yeah, 0.04s. I don't know. Maybe it is just because of those pairs, but commissions on there. That's good. Looks good, doesn't it? I might buy it. So it does hold overnight as well. You got swaps. So that's why they're using Aussie pairs, because of the swaps. If it is hold overnight. I mean, look at that trade there. $3.90. All eaten up by the commission and spread, isn't it? $2. $500. 0.01s, yeah. Okay. So yeah, basically it's just going in with the basic minimum lot size, and every time it gets a hedge wrong, it just basically doubles and doubles and doubles and doubles and doubles. Looks to me, I have to say, the strategy does work up to a point, but as I've just shown you in the backtester, come very, very close to a 50. It's come to a 50% drawdown on account. So, I don't know. Too many settings for my liking as well. It's got to be simple, isn't it? RG, sadly, I can attest to your comments about Martingale blowing one's account. Everybody's been there. I've been there. Just one of those things, Martingale. Everybody tries it because it looks good on paper. Like this. Yeah, I mean, this thing, look, it looks good on paper, doesn't it? And these are forward test results. So this is getting my curiosity now. I want to kind of back test this and unpick it to find its Achilles heel, because you don't often get things like this. Normally what you find is when you get these live signals, these live signals tend to be a few weeks old, 3, 4, 5 weeks old, because what it does is it trades until it blows an account, then it starts a new signal, then it trades and it blows an account, starts a new signal. But this is taking such low risk that, you know, it's like doing position trading. If you position trade on a 100 grand account with a 0.01 lot size using Martingale, I don't think you'd ever blow your account. You also wouldn't make any money. So, you know, you can show a strategy's success with very, very small risk, which is how people like Warren Buffett make money. They trade with billions and billions of dollars, taking tiny, tiny risks to look to produce something like a 5 to 10% return a year. You can do that if you use very, 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 very tiny risk, because you can basically buy something forever. Eventually, it will go up enough to get you out, won't it? And if you're using Martingale, it will get you out a lot faster. So I think that's probably what this is doing. It's obviously using tiny, tiny, tiny risk. But I suspect what everybody that uses it will do is not use it on that setting that is low risk, because it gives you a 20% annual return. So everyone's thinking, I'm going to start this off with a 5 grand account. That's not going to be enough, 2 grand a year, because that's my mortgage every month. I need to get the big one, the high risk set. That high risk set is the one that probably blows all the accounts, which is why there's only a signal for the one version that will work, but it won't produce enough return every year to actually make it worth warrant running it. I don't know. I might make one of those. It's a good idea. Sell it. Won't return us any money, but hey. Oil comes down. Time to add a new position, is it? Yeah, I'm out of that one. So I'm looking to get in again down here.
Basically, if we can get a run down into that low, potentially down into that low there. I'm just going to place another pending order just beyond, oh, wrong one. Just beyond that level. So, just beyond ADR, so this weekly low here. And then just above that propulsion gap. That's the kind of last chance saloon, if you like. So if we break that low, I don't think it's coming back. I think that's it. It will come back, but I'm not willing to hold really beyond that level. So I will have another go at getting in down there, assuming that we're going to double bottom that. If it breaks that level, I'll close out, and then I will also reduce those positions. And then we're looking at coming all the way back down into this monthly level, which is this high there. So that's your next support, which is 77.20 a barrel. I don't think it's going to come down there, though. But that's why I got out of that position. If it breaks that level that we were looking at today, I don't want to be in it because that's going to take too much drawdown. Potentially that position there is going to go too much into drawdown. If it pushes up again and puts in another ADR, I'm back in profit on that position. But this is not panning out. This is why I don't trade oil as a position trader normally. Every time I try, I have a little bit of success and then it stings me in the arse. It's going onto my naughty list with gold. Wacky, yeah. Hamza, it was suggested to you, so you researched it. Yeah. It's on my FX book, is it? Rent it, yeah. UJ is really going now. Cool. Yeah, 150 ADR. So I'm coming down to my first TP on that, which is 0.75%. Look at that. That's my average price, yeah? Look at it. I'm still $340 in drawdown. I'm that far beyond average. I'm still in drawdown. All swap. The whole lot is going to be eaten by swap. Pain in the ass. US dollar yen. Look at this. Copy for $999 a month. It's only produced 10 grand in profit all the time it's been running. How can you copy it for $999 a month and sell it for $2,200? How's anybody ever make money using this? Is that the game, do you reckon? This is starting to make sense now. So you produce something that actually works, but returns virtually no money. Because to be able to make it work, you need to use a lot size that is so unbelievably tiny for your account. There's no way on earth it would ever blow, because the probabilities of a martingale going to probably 10, 15 or something is where it would blow. However, you sell it for so much money, like $2,000, somebody sees it and they will never use the version that you put up as a signal and give the results for, because they can't pay their mortgage with it. So they buy it for a large amount of money, up the risk. And as soon as they up the risk, it blows the account. And then the person turns around and goes, well, you're not using the settings from the signal. Is that the play? Just trying to figure out where the rub is in it. Somebody that's used it will have to tell me. They put $919 a month so that no one copies them. But then why do people buy it? This is the thing that I don't get, right? So this is the got this signal to access the system behind it. Sensible grids. Oh, it's a grid system. It's a grid martingale. It's even worse. It gets worse. Grid and martingale. These pairs are the best ones for grid trading, as they are ranging ones. When they're not trending, they are, yeah. Tied to volatility. So it's based on ADR. That's a good thing. Profitable in pips, very important. And has more than 3 years of live trading. Signal was truncated, probably because the EA author lowered risks on it as time goes. Who is this ant? Have they ever... This ant from Russia, the same place as the signal comes from, has only ever done one thing. Left a review for that thing. Same as Angkor Wat, only ever done one thing. They're also from Russia. VWA, never done anything else. Oh, they're from the Isle of Man. At least they're not from the same country. Maybe I'm just skeptical. Maybe somebody has found the Holy Grail. Anyway. I shall keep doing what I'm doing. Hope. They buy it with Lambo glasses on. Yeah, quite possibly. This is the thing, though. I've never been the type of person to buy something without having 100% proof. I'm always skeptical about everything. Yeah, if I am shopping for a car, right? I've been shopping for Porsches for many years. I've owned them, and they go wrong a lot. And I know all the bits that go wrong with Porsches, right? So if I'm going to buy a 996, you've got to look for bore scoring. If you're going to buy a Boxster, a 986 Boxster, there's a bit of the gearbox which tends to go wrong and it blows up the car because the gearbox explodes. So I know all the faults and things in all the cars. Whenever I see a car that's cheaper than the rest and looks too good to be true, the first thing that goes through my head is, which of the problems has it got? And I know all the problems in trading as well, which is why when I come across things like that, it makes me curious because it looks very, very good. Normally what happens when you backtest all these things, they all blow up. There's always got to be a way that things get manipulated to look better than they are in this industry. That's the way that I always approach everything. So whenever I get to something that I can't find something in, it makes me curious. That's got me curious. And I'm thinking the only way that I can think that is actually going to work is if you are using no risk with maximum account. Like you're trading think about it. If you had $1 million account and you're trading it with 0.01% or 0.01% risk, you're never going to blow the account. Physically, the price could not go in one direction long enough to kill you, could it? And that, I suspect, has been started with a low account with a decent amount of risk. It's increased the account size. They've dropped the lot size, increased the account size, dropped the lot size to a point where it just is self-fulfilling. But you're not going to do that in the real world, are you? You want something that's going to be consistent with the same results and the same risk all the time. 3-bar reversals just gone in. Out of propulsion. All starting to go the other way. So gap fill. Good looking short. If we break these lows, I think we'll probably get that gap done. So good shorting opportunity right now. There's probably 1% of developers on MQL5 like myself that are actually legit. Yeah. But I'm not legit in the fact that I make products that are amazing. I'm legit in the fact that I tell people what the thing does. I never promise anything. I don't produce results. I don't have signals. I get asked for signals all the time. It's like, no, I'm not giving you a signal. Go and use it. See how you get on. It's because it's not, that's not what I'm about. I'm about producing products that make your life easy, not that are guaranteed to make you a load of money. They're not. You get 3 people using, there's somebody in the Telegram group using the market reverse alert CA, blew their account. Nothing wrong with the market reverse alert CA. It did exactly what it said it would do. When the RSI got extended, it shorted on the next reverse alert. What they did was use much bigger risk than they should have done. That's why their account blew. Nothing to do with the product. I can always put a back test together with every product I make that will produce a result, but you won't get that result. That's the difference. I make things that just are helpful in trading, but you've got to be a trader to use them. which is kind of what Trevor's point was, which is why we started talking about all of this. It is all complicated. Yeah, it's bloody complicated. All of this stuff I'm waffling on about now, like there's a nice 3-bar reversal out of propulsion. All of this stuff has taken me a decade to figure out why this does what it does when it does it. I make it look easy, and people say it all the time, oh, you make it look so easy. Yeah, because I've seen it 1,000 times. It's not easy, and it's not guaranteed to work. This 3-bar reversal here is either going to do that or it's going to do that. One of those two things is going to happen. I don't know which it's going to be. It looks short because there's a gap fill to the downside, and 90% of the time those gaps get filled. When there's a 3-bar reversal out of a big sell order, they usually work. If this goes up, I'm wrong. I have no idea if this is going up or down in the next 15 to 20 minutes. I can't build you a product that's going to tell you that either. But I've seen it 1,000 times. That's the difference. And that's what you can't replace with any EA. There's no product you can buy. There's no course you can do. There's nothing that's going to teach you watching this thing go up and down every day. That's the only way you're going to make it. And it's complicated and it's hard work, and you've got to put the time in. And if you work full time, it's just chasing a dream. It's like working full time, having really bad eyesight and being no good at maths and wanting to be a fighter pilot. Sorry, it's not for you. Bus driver, train driver, fighter pilot? No. In fact, no, don't be a bus driver or a train driver if you've got bad eyesight either. That was a bad example. Certainly don't be a surgeon either. Whatever your job is, probably stay there. 60 people. 60 people live now should equal 60 thumbs up. That's correct. Nobody ever gives thumbs up. Everybody's too watching me waffle on all the time. Only 59. Greg Secker will be in here. He won't leave a like. No, my mate Greg won't leave a like. Big brother, do you offer Black Friday specials? Yep. Only if you give me a thumbs up, though. I'm watching the counter. Yes, I will do a Black Friday sale, probably. It's a lot of work. There's no sale system in this thing in MQ5 Marketplace. There is no sales system. I have to open every product, change the price in every product, save every product. Then I have to go onto my website, and I have to do. There's a lot of work involved in running a Black Friday sale. And to be honest, it doesn't really do an awful lot because I don't sell a lot. This isn't my job, is it? I don't sell. I'm not like this person. If they have really, look at this, 40 reviews. If they really have sold 40 of those, where's my calculator? $88 grand. And that's only the people that reviewed it. Money to be made doing that, isn't there? Waka Waka is a Martingale grid, and like any other Martingale grid, it can blow up the account. If the trend goes against you long enough, which has happened again in the last few days for some users, as market conditions have changed. Fantastic grid EA with a very customizable setup. Manage your multiplier, grid distance and lot size balance, blah, 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 blah. Market is constantly changing. Do not forget the end of May ordeal for New Zealand dollar CAD. There's many users lost money due to the extreme trend. Dot. There's a good 1-star review. Dot. Thanks, Chris. Dot, dot, dot. 1 star. Why are these 1-star reviews got dot, dot, dots? Make sure you've got the best settings. Yeah, that's useful. Sorry, I'm just sitting here now reading stuff because I'm bored. But I'm just curious. I wish nobody'd mentioned that today. I'm going to spend the next 2 hours now diving into that, trying to figure out the logic of it so I can reproduce it properly and see if I can break it. Anyway, I will carry on not looking at that now. Let's all spread the word. Yeah, go and spread the word about me and send everybody to the bootcamp. Let's all get the sales up. No, don't get the sales up, David. I don't want that. Believe it or not, I don't want to sell tons and tons and tons of product because it causes an awful lot of work for me. If I was to, I think this is part of the problem. These people that have all these products out there, they spend probably, and I know how much I have to do with people that buy my stuff, and there's nothing wrong with it because it is quite complicated. But you spend an awful lot of time with people. If I sold 5 times as much as I do at the moment, which isn't a lot, I would never trade because I would just be. I'm looking at my Telegram now. I've got 14 DMs in Telegram. I've only been on for 2 hours. I've got 14 DMs in 2 hours. I've got to answer now. That's another hour of my life disappearing when I get off stream. This is why I build all my products to automate my life, because if I don't do it, I'm never going to be able to trade. But yeah, I don't necessarily want to sell a load of products. I don't want to be one of them. They're there to help people if they want them, and that's why I say in the bootcamp, yeah, you do not need to buy anything to do the bootcamp, to learn to position trade, to do the stock index hedge strategy. Yeah, you don't have to buy the stock index hedge EA, right? As soon as the market opens, just go buy stop, and then go under the low and go sell stop. Done. Right? You haven't got any TPs or stop losses, but the market's not going to move that fast. And if it does, you just go close. Yeah, you can do everything I teach is all fully manually tradable. I automate it because it's just hard sometimes to get them on. Yeah, position trading, the market reverse alerts EA. You don't need it especially if you're not even trading the strategies I teach and you're making your own position trading strategy up. It's no use to you, is it? Yeah, build your own. And nobody leaves reviews on my products either. Do you know why? Because people don't leave reviews about stuff that they like. I don't. I'm exactly the same. I've bought thousands of things off of Amazon. I've never left any positive reviews about anything. I have left negative reviews about stuff that's crap. That's all you get. I never ask for reviews. I'm not one of these, hey, give me a review and I'll give you a secret set file. That's what the scammers do in the Telegram group. Anyway, UJ at 2 weeks low. Yeah, we are really tanking on this. So we're 175 ADR, CAD yen 125 ADR. So all the yens basically. Nice move starting. What I might do actually as well, this US dollar yen. I've got one in profit, haven't I? That one. Look at that. Look at this distance this thing's moved, yeah, from that entry there down to there. $600 of profit. What's my swap? Let's have a look at what my swap is on that position. Oh, that's not bad. $66 a swap on that position. That one there, $300 a swap. This position here, $300 of swap, $212 of profit. Oh, God. It's enough to make you weep. So what I'm going to do with this US dollar yen, I'm going to assume this is it. I'm going to assume this is the start, and I'm going to move my TP all the way down to where I wanted it to be, which is down at this propulsion gap, which is the intervention bottom. So that we're going to get a bounce definitely off of that level. So I'm just going to try and hold this and see if we can get a big move tomorrow morning. Don't forget, tomorrow morning is the Bank of Japan news. We've got the outlook report, the policy, and then the monetary policy statement. If they start talking up in the way that they've done today, we're going to get a big move on that yen. So we could be looking at a 200 ADR move overnight. So from where we are here, let's say we close somewhere around here. Yeah, ADR is 61. If we do 200 ADR, we're looking at 120. So we could be somewhere down here tomorrow morning before the Frankfurt session. So down there somewhere, I reckon. I'll see where we are tomorrow on it, but hold as much as you can. But even if it pulls back, yeah, it's, you know, we've made new lows now. We've had an intervention. They broke it. They tested it twice. They've added to it. So this buy order on the yen, which is a sell on the US dollar yen, obviously, that is an add to that move. Yeah. So pushing back up into this area and then adding again is what I would expect if we're going to get that move started. So this could be the start of a very nice big multi-week move. Try and hold it as much as you can. David, since you're the master coder, I wouldn't say that. Is it possible to create something that manages your exposure to only 2 positions per currency pair? It is probably doable, but it's very complicated. It's very complicated to do. So you probably could, but not easily. Need Qbert hopping around. Yeah, what as my support? Good old Qbert, love Qbert. 1,160 banked on the NASDAQ this morning. Good job, Brian. No holding through my lunch, through the New York lunch. Unfortunately, I have a funeral to attend. Sorry to hear that. That's not good. Never good. Getting to that age now. You get to that age in life where you no longer go to weddings anymore. Part of growing up. Right, I'm going to leave it there. Everything else I've got on at the moment, as you can see, there's not a lot of it, but anything that is in decent profit tomorrow, I'm going to start to bank, because obviously we've got FOMC coming up on Wednesday, and I'm conscious of potentially buying into the US dollar ahead of FOMC. At the moment, certainly doesn't look that way, does it? It looks like they're selling into the US dollar, but I'm going to basically be trying to get as flat as I can and get profit in the bank ahead of FOMC tomorrow. So I'm going to hold on to everything at the minute and just see how we go. But the main problem I've got at the moment is oil. This oil price is coming down a lot further than I thought. So I will buy it up again. This is going to be the last attempt, though, down here. If we break that level, I'm going to take some loss, which will be unfortunate because it will ruin a good month. Hey, I know. If I don't take the loss this month, i.e. tomorrow, and I put the loss into next month, I can show you my P&L being absolutely amazing and then not show you next month, because next month I can take a load of loss. People do that. Anyway, I'll leave you there. I'll be back tomorrow, same time, 7:50 for the Frankfurt session tomorrow morning, 1:20 tomorrow afternoon for New York. I will remember and be here on time tomorrow. And then, yeah, we'll see where we go with everything tomorrow, basically, after the yen move. So we've got a lot of news starting tomorrow, and then it continues for the rest of the week. So today's the calm before the storm. Pretty busy as well, isn't it? So we should have a nice, big, volatile week this week. So hopefully you can make a lot of money. All right, have a good one. Anything you need, I'll be in Telegram. Other than that, I will see you guys tomorrow at some point. Have a good evening.